Hi, this is Jeffrey Kerr at Kerr Financial Group, and today is Friday, January 12, 2024. Uh, Yesterday's news with the CPI, which we covered a little bit on the Wednesday video. So, going into the release of the numbers, the U.S. stock market futures were up. It was a pretty strong looking morning. The number from the CPI released at 8:30 is higher than expected. So the market translates that into perhaps the Fed not being able to cut as quickly as they had hoped. So you end up with the stock index futures going from pretty strongly positive to pretty strongly negative. Markets open up at 9:30 and get sold off pretty hard. Nasdaq was down at some point, I think around 1%. And then as the day wore on, it was the market stocks firmed up, bond yields came back off, and I think it points towards the dynamic that's been going on. I think for a while in the markets that in the short term, the direction and the trade is so influenced by dealer flows, option trades, and algorithmic trading. And for example, yesterday in the U.S. options market, the total volume, 55.6% of total option trading market in the U.S. was zero DTE, zero date to expiration. So these short-term options, which institutions are using for both hedging and to gain exposure, and it's just becoming so important in the markets, and it has, I think, limited, if no, connection with economic or corporate fundamentals. And I think that's where the market, the environment of the market is right now. So it's very hard to gauge where things are. So, stock markets, the big indexes, S&P and Nasdaq, little change. The Russell was weak. The Russell was pretty weak. It's been weak all this year. But, again, I think the point of this is that the markets have other influences than just economics and the fundamentals. We'll speak to you next week. Thank you for listening. Goodbye.